MarketSmith India team. Before we go ahead into this podcast, the disclaimer is registration granted by SEBI, membership of BASN, and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investments in securities market are subject to market risk. Read all the related documents carefully before investing. It's very important to understand Nifty's price volume action to gauge the market and have a short-term view on the market as well. After trading in a very narrow range around 23,500 and 300 range, Nifty has broken out clearly on the higher side. And yesterday's session was a clear one-sided momentous session for the index, and the volume has also picked up in the yesterday's session, which was lagging in the previous three trading sessions. For the first time, Nifty closed about 24,000, which is a very historical moment for the Indian investors. Not just the Nifty and Sensex, the broader market indices, mid cap and small cap indices have also been doing very good in the current market. This signifies that the overall current rally which is going on in the market is not just concentrated among the large cap stocks, it is also spread among the small and mid cap spaces as well, which is a very constructive rally. Coming to the market methodology, according to Warren's market status, we are in confirmed uptrend, and we had a one distribution day during the last week, and we have a distribution day count of 1. Going forward, the market is looking on the positive side, and it is very constructive as well. On the downside, if there is any accumulation of distribution days and distribution day count elevates to 4 or 5, and if it reaches 50 DMA, we might change the market status to under pressure. But going by the current scenario, it is looking very far-sighted view that Nifty will be back to under pressure. We are expecting the market to stay on the higher side, and coming to the model portfolio, we have added a good number of stocks to portfolio as well, and most of them are also doing very good. And we will also be scouting for stocks which are looking good both on fundamentals and technicals. If there is any good stock breaking out or giving alternative bypass, definitely we'll consider them to our portfolio. Regarding the existing stocks in the portfolio, we'll be looking out for stocks which are moving sideways or which are underperforming, and we will exit those stocks and will make room for new stocks. Moving on to the next part, that is key stocks which are in news and which will be under radar during the trading session. KPI Green Energy has issued a sanction letter from the banks around credit facilities of around 686 crores. So this is for the development of 600 MWAC solar power project in Gujarat. RBL Bank, as the board has approved raising funds up to 3,500 crores of rupees. This is by a QIP or in QIP in one or more tranches. And also, apart from this, the bank is also looking to raise 300 crores of rupees by debt securities. This is also in one or more tranches on a private placement basis. AU Small Finance Bank is also on the similar lines. The board has approved raising funds more than up to 5,000 crores of rupees by issue of equity shares, either by private placement or QIP or preferential allotment or any other modes. Apart from this, the bank has also approved raising funds of up to 6,000 crores in one or more tranches. This is by debt instruments. Coming to the institutional activity, yesterday, foreign institutional investors were net sellers. They have net buyers, sorry. They have bought more than 7,600 crores of Indian equities. Domestic institutional investors, on the other side, have bought more than 3,600 crores of Indian equities. US market closed in the flat, you can say, with a slight positive bias. Dow Jones and S&P closed with a gain of 0.1%, whereas Nasdaq closed 0.3% higher. Asian markets are trading positive as we speak. Kospi is trading with a gain of 0.2%, whereas Shanghai and Nikkei are trading with a gain of almost 0.8 to 1% range. SGX Nifty is indicating a muted opening for the Indian market with a positive bias as well. Going by the global market update as well, we have strong positive cues from the Asian markets. So we might expect again Nifty opening on the higher side, scaling new high in the today's trading session as well. Coming to the chart of the day, we picked Arvind Fashions. Stock has been trading in a very long consolidation base pattern, but has recently broken out from its base pattern. But yesterday's session was highly volatile. It closed below the pivot, and the volume was also higher side. Apart from that, most of the parameters are looking very good for the company. If you look at the base pattern, the volume has dried up during the base formation, which is very good sign. Right side of the base formation, the volume picked up, which is again a positive sign. So overall, the base formation has been very ideal. And ratings, if you look at, ratings are also looking good enough. You can say EPS is at 75. RS is slightly on the lower side at 63, but that will improve as the stock breaks out from here. Number of funds section has also seen very good improvement in the last 4 quarters. Again, a positive sign. Overall, on many factors, parameters wise, it is looking good. If it comes back to its ideal by zone, definitely a very good contender and might do good in the current market scenario. Thanks for joining today's people. Have a good trading session.